Warren Buffett, the renowned Oracle of Omaha, is a legendary figure in the world of investing. As chairman and CEO of Berkshire Hathaway, Buffett has built an empire based on the principles of value investing. This approach, championed by his mentor Benjamin Graham, emphasizes identifying undervalued companies with strong fundamentals and holding them for the long term. Buffett's investment philosophy extends beyond financial metrics. He believes in investing in companies with strong management teams and a durable competitive advantage. This long-term perspective has defined Berkshire Hathaway's investment strategy and contributed to its remarkable success. Over decades, Buffett's leadership and investment acumen have transformed Berkshire Hathaway from a struggling textile company into a sprawling conglomerate. Today, Berkshire Hathaway is a holding company for a diverse range of businesses, from insurance giants like Geico to consumer brands like Dairy Queen. His insights on investing, business, and life continue to inspire and shape the financial world. Berkshire Hathaway's cash reserves have always been a subject of much speculation and analysis. As of the end of 2024, the company reported a staggering $334.2 billion in cash on its balance sheet. This massive war chest is more than double the $163.3 billion held at the end of 2023, indicating a significant increase in liquidity. He firmly believes in maintaining a large cash cushion to capitalize on opportunities when they arise. This approach allows Berkshire Hathaway to act decisively during market downturns or when attractive acquisition targets emerge. However, Buffett is not one to let cash sit idle. In 2024, the company was a net seller of stocks, selling $143 billion worth of holdings, while making $9.2 billion in new purchases. This approach was evident in Berkshire Hathaway's recent investment moves, which included both new acquisitions and increased stakes in existing holdings. In the fourth quarter of 2024, Berkshire Hathaway made new investments in several companies, including Constellation Brands, Domino's Pizza, Occidental Petroleum, and Pool Corp. These additions reflect Buffett's continued interest in consumer staples, energy, and businesses with strong brand recognition. Furthermore, Berkshire Hathaway significantly increased its stake in 5 Japanese conglomerates: Itochu, Marubeni, Mitsubishi, Mitsui, and Sumitomo. The company's total investment in these companies grew from an initial $13.8 billion in 2019 to $23.5 billion by the end of 2024, demonstrating Buffett's long-term confidence in these businesses and the Japanese market. These strategic investments highlight Buffett's commitment to identifying undervalued assets and capitalizing on opportunities in both domestic and international markets. Among Berkshire Hathaway's vast portfolio of businesses, Geico stands out as a cornerstone of its success. As one of the largest auto insurers in the United States, Geico has long been a major contributor to Berkshire Hathaway's earnings. However, the company has staged a remarkable turnaround, reporting a surge in underwriting earnings in 2024. Geico's underwriting earnings reached $7.8 billion in 2024, a significant improvement from the $1.9 billion loss it incurred in 2022. This resurgence highlights Geico's strong brand recognition, efficient operations, and ability to adapt to changing market conditions. Geico's success is not only crucial for Berkshire Hathaway's bottom line, but also provides a steady stream of float, premiums collected up front that can be invested until claims are paid. This float provides Berkshire Hathaway with a significant source of low-cost capital, which it can then deploy into other investments. While insurance operations, particularly Geico, form a significant part of Berkshire Hathaway's portfolio, the conglomerate's reach extends far beyond the insurance industry. Berkshire Hathaway owns a diverse array of businesses spanning various sectors, including energy, railroads, utilities, manufacturing, retail, and consumer goods. This diversification is a deliberate strategy employed by Buffett to mitigate risk and ensure consistent returns over the long term. Berkshire Hathaway reduces its exposure to any single sector's volatility. Some of the most notable subsidiaries in Berkshire Hathaway's portfolio include BNSF Railway, one of the largest freight railroad networks in North America, Berkshire Hathaway Energy, a major player in renewable energy, and McLean Company, a leading distributor to retailers. This diverse portfolio of businesses provides Berkshire Hathaway with a stable earnings base and positions it to benefit from a wide range of economic conditions. It reflects Buffett's belief in investing in essential businesses with a durable competitive advantage. Section 6. The looming succession. Greg Abel steps up. As Warren Buffett approaches his 95th birthday in August 2025, the question of succession looms large over Berkshire Hathaway. Greg Abel, a longtime Berkshire Hathaway executive, has been officially designated as Buffett's successor. Abel currently oversees Berkshire Hathaway's non-insurance businesses and is widely respected for his business acumen and deep understanding of the company's operations. Abel's appointment as Buffett's successor marks a significant milestone in Berkshire Hathaway's history. It signals the board's confidence in Abel's ability to maintain the company's culture. The transition is expected to be seamless, ensuring the continuity of Buffett's legacy.